Hello, everyone. Welcome to the stock specific class here for Thursday, October the 14th. Nice rebound in the market today. Been waiting for kind of a move that could possibly signal a direction. There's a lot of participation in the rally, which is always a good thing, a good sign. You want to see that market breadth as well. There are a couple things that we have to be aware of, though, when we look at the charts. Just to be aware of, you always have to you got to be careful not to assume that a one-day move like this is going to end up being a huge move over the next several weeks. It's always, I think, important to be cautious, to look at alternatives, to make sure that we don't get too bullish or too bearish. And again, I'm talking about this in both directions. I think it's healthy to kind of look at different scenarios, and that's so that if one of those scenarios does play out, that you're not caught off guard, you're not shocked by it, or you wonder how could this happen. And so I'll point that out as we kind of analyze the market here, and then again we'll kind of see what happens. As far as the direction alerts, one thing that really just jumps out at me when you look at these charts here, this one in particular, is that you see that the momentum and breadth, they're all the way down here. They've rebounded a little bit off the lows, but they're all the way down here. And look at the sentiment. As the market has kind of sold off, the sentiment has just stayed high. And I've talked about this in a number of updates. I don't want to, keep repeating myself, although I know I have new people that join in on these updates from time to time and may not have heard it before. But there was just no fear in the selling. And this is why I want to look at some alternatives as well, because it's still possible that we have another downturn at some point because of that. And so we don't want to be caught off guard if it starts to happen. We need to understand the conditions we're in, and that it's still possible that we get a sell-off that creates some of that fear, that gets that sentiment to drop down a little bit. And it's probably, I'm not expecting it to drop all the way down. There's some big lows here that sentiment was at on the sell-off last year around this time. But it just is. It's just amazing that we've pulled back without having that sentiment drop at all, and that is kind of concerning. And there's a reason why I keep bringing it up, is because if we do end up getting a sell-off out of nowhere that shocks everybody and causes a panic, we can look back on this. This could be a learning experience. We look back on this and say, hey, this was signaling that we needed to be a little bit more concerned that thing wasn't dropping. And you can see it play out here. You can see momentum has pulled back. This will move up a little bit with the market rally today. We'll see this move up into the hold area when this updates overnight with this market rally today. Same with breadth. Breadth has been pretty strong today. And then, like I said, sentiment this will even update further. It'll move probably into that pretty close to that extreme range when this updates. That's the one thing that really kind of concerns me. The buy-sell ratio of the whole market, if we look at that, it's at 0.86. That could end up getting very close to, it should get pretty close to 1.0 when this updates overnight with the strength of the rally and the participation in the rally. A lot of stocks participating today. So we could add some trades to the portfolio, which I plan on doing. There's a couple that went to buy signals today. Now let's look at, and the sentiment is still, this sentiment indicator is still shows that it's not extreme yet. There's still some room to run on that particular sentiment indicator. Let's take a look at the charts here. S&P 500. So we see we gapped up today, and the good thing about it is we gapped up and we kept running, so it keeps moving higher. It looks like it's going to close higher than where it opened after gapping up. The one thing I am a little bit concerned of, though, is could it be that this is a bearish ABC pattern right here? Maybe we see another up day, or maybe we gap up again. We have a bearish reversal candle or something that happens tomorrow, and that eventually this thing ends up moving lower. We do have this long-term trend line right through here. I know that line isn't drawn very straight, but it actually, could we rally up to that near that trend line again and then roll over? Yeah, that's another possibility. That's something we'll look at. The bullish argument would be that this is the correction, this is the ABC, and that this is just starting a new trend up. And so that's what I'm saying, to take a look at kind of both possible outcomes. If this thing keeps going higher and there's broad participation in the rally, go ahead and trade that. I mean, obviously with a move like today, you're going to assume that the trend is up and it's going to keep moving up off of this pullback right here. But because of those other things I pointed out, don't be shocked if we get a kind of a bearish reversal candle at some point, and who knows, maybe things head lower. I know there's a lot of talk today that earnings have been good, and that's the kind of the reason behind the rally today. But one thing to point out is that those earnings have been the bank earnings, and we were expecting bank earnings to be strong based on the conditions we're in right now. And so what's really going to be the key earnings coming out are these companies that have been impacted by some of the headwinds, the supply chain issues, when some of the retail stocks start reporting, some of the employment problems, people trying to staff. And you've got some of these restaurants, I don't know if some of you have noticed in your own areas, I've noticed in mine, where they can't find enough workers, and so some of them are closing down early. They're only open during kind of lunch and dinner, and then they close down. They don't stay open later because they can't staff people for the longer shifts. Well, that's going to end up having an effect on earnings at some point. So I think we need to get further into earnings season here to see how that's going to affect things going forward, and how the market's going to react to that going forward. So I'd be very cautious to just assume with the bank earnings kicking off earnings season that's going to be the signal of how things are going to go for the rest of earnings season. So again, I'm kind of playing devil's advocate here, but for good reason. I've been doing this a long time, and there are times in the market where I feel like I'm being drawn in. I feel like I'm being set up for something, and this is starting to feel like that. Now, again, I don't see any strong bearish reversal signals yet as far as the price action or chart behavior or anything like that. So you continue to trade what's in front of you. You continue to trade bullish right now. That should be the direction you're trading in. But as soon as you start to see some of those bearish signals, you want to be able to pay attention. I'll point them out if I see them in prior to one of these updates. I did get a question on, are these recorded? Yes, these updates are recorded. You can go to the YouTube channel and find those and be able to replay those later on. So if you can't make a live update, you can catch up with it that way. All right, and the other charts are basically the same. Dow up pretty strongly today. It's not, I mean, look at just the indecision through here on the Dow. I mean, that's just pretty incredible. That's just been kind of chopping around after this decline. There's just been a lot of indecision lately, and so that kind of adds to my skepticism. The NASDAQ A little bit clearer chart here, but again, I still point out to that, going to that lower low right through here on this decline. Could this be kind of a bearish ABC pattern that sets up for another move lower? The idea being, if I draw this out in a larger context, you can kind of see, we have this big run up right here. Could this just be wave A of the larger correction? This is setting up to be wave B. Again, probably up for a few more days right here, but wave B, and then you get wave C that brings you down into this area that would probably create more fear. Obviously, you'd see that sentiment drop, fear entering the marketplace, and then that sets you up for be able to have a bigger rally at that point. Although if we rally up from here, I'm telling you, what we're going to get is what I talked about in the summer. You're going to get those extreme overbought in breadth and momentum and sentiment, and that could signal that you're going to start a bigger correction. It could mean that we haven't even started the bigger correction yet, but that would probably come with the markets breaking back to new all-time highs, and that's definitely possible. We could rally into the end of the year, and then early next year maybe get the start of a bigger correction. We'll see. That'll be down the road. We'll take a look at it from week to week and see how things kind of look there. The Russell 2000, this chart's been all over the place as well. The kind of the key areas again on that you want to look at are the upper part of the sideways range right up here, the lower part of the sideways range down here. If it breaks up above there or below there, that's going to signal something very significant for the market that whatever it breaks, either direction there. All right. Let's get into, so again, the bottom line with that analysis is that we're expecting the market to be a little bit more bullish. We can look at adding some positions, and so let's go through the sectors and see if we can find some individual stocks that are interesting to us. If I go oil sector, obviously oil's been kind of leading the way. In fact, let me go back to that watch list and just take a look at the oil chart here. Well, take a look at oil and the dollar real quick. You can see we pulled back a little bit earlier in the week, not by much, and then we're right back to moving higher. So obviously this is oil's in a very strong trend. And so, you ride that until you see it change. I know that people have been talking about oil getting to a level here where it could drop very quickly, and that's definitely a possibility. But on this chart here, we're not even in the extreme reversal risk range. We might get close to that with today's move, but again, this is the strongest trend right now. You want to find the stocks that are in the strongest uptrends. You're going to find them in the oil sector. And then if we look at the dollar, usually you would expect the dollar to be moving in the opposite direction, and it has the last couple of days. But I'm looking at this whole behavior right here. This looks very sideways and choppy right through here. And again, what I always tell you is whenever you see something moving sideways on the chart, you want to pay attention to the direction it was moving in before it moved sideways, because that's the most likely direction it's going to go in after it's done moving sideways. Obviously, that trend was up prior to that sideways behavior. The stronger probability is that the dollar is going to continue to move higher. Now, that could be an argument against oil and to be cautious against oil trades, because there could be a point where you could see the commodities such as oil start selling off because the dollar is so strong and continuing to strengthen. But it is kind of weird to see them both moving in the same direction as long as they've been moving in the same direction. It doesn't happen very often, and that is something to kind of pay attention to. Those are a couple charts that you want to kind of keep an eye on, especially if you're in an oil trade, just kind of watch what's going on with the dollar as well. They tend to have that inverse relationship. All right, so let's take a look at the oil sector here. A couple of stocks that have pulled back in that recent pullback. We do have BTU in our watch list, waiting for that to go back to a buy signal. I'd probably add in LPI right here, Laredo Petroleum, 98 strength rank. And let me flip the signals on here. Recently gone back from a buy to a hold, but what I really like is this larger dip, and it's come back up to a breakout area right here. There's a couple ways to trade this. This looks like a possible ABC pattern right into here. Wave A, wave B, wave C. If this thing goes back to a buy signal, you can get in. You could wait for it to break out above this area right here to buy, a little bit of a safer entry point. You could wait for this to go back to a buy signal and get in, and then add to it if it breaks out. So there's different ways that you can manage that. But the reason why this area is so significant is whenever you see a pattern like this where it dips down and comes all the way back up, if it breaks out, one of the rules of thumb I always talk about is that if you want to kind of get an idea of the potential of how far something can go on a breakout like that, you can take the distance from the top of that bowl to the bottom of the bowl and project that upward. I don't even have room in the chart here to go on the screen to go upward. There's huge potential there for that to run even higher. Now, does that always work? No. And in the context here where oil's already made this huge run, oil would be a little bit different argument for this type of an expectation, because if we did break out and it started to move higher there, what makes the oil market unique is that it's not completely market driven, which means that at some point those OPEC nations are going to start pumping more oil to get, because the prices are so high, they're going to make a ton of money. They're now obviously they know if they pump too much, the price is going to come down. It's going to work against them. But the greed factor at some point always kicks in, where these companies are like, I don't want to be the last one to start increasing production, because then I don't get to benefit at all. I want to be the first one to increase it to where I can benefit the most from it. And that's what ends up happening. And so it could be that it breaks out of that, and then everyone gets greedy and starts pumping oil, and then that causes the price to drop. So this is a little bit of a unique situation here that you'd have to be aware of, but that's a chart that if this thing can go back to a buy signal, maybe we can just trade it through a breakout until we start to see it reverse trend. And as trend traders, let's trade it as long as that trend is intact and how far it wants to go, and then we'll worry about what happens after that later. All right, another one in the oil sector is this SD Sandridge Energy, 97 strength rank. Again, nice uptrend, and then it's pulled back a little bit from that. A little bit of a possible ABC pattern there. Now, again, there's potential that this thing could drop further, and that's why we'd want to wait for that confirmation, wait for it to go back to a buy signal. It has already been an uptrend for a while. Some of my favorite patterns that I like to look for are ones where they've already had a deep pullback and they're just starting to look like they're turning the corner to head back up, because there's so much upside reward potential, very limited downside risk when you're using a stop. But there again, when you have well-established trends, again, let them go as far as they want to go, and maybe you only make a few $100s on the final rally it goes into. Well, so be it. We can trade some of these as well, so I'll throw that in the watch list. And again, I'm not saying I'm going to trade all these in the portfolio. I can't trade everything in the portfolio, but I'll put it in there, and if we get that buy signal, I can make a determination on whether or not I want to add it, or if I even can add it. We've got a lot of capital already used up in the portfolio at this time. But that's one that I like that pattern. Another one, the oil list here, would be, we already have rig in there. In fact, rig is one of the ones I'm going to be entering into today. It went to a buy signal today, but this AR right here, 96 strength rank, very similar chart, just a little pullback that looks like an ABC pullback right here. It's gone back to a buy signal actually today, it looks like. That's kind of one that you could kind of keep an eye on or look at. I already have the ones I want to add to the portfolio, so I won't be adding this one in but we can put it in the watch list. In fact, probably should have already put these in. Let's go ahead and put these in the watch list here. If you click on this little green plus button right here, you can add it to your watch list. If you stock specific class, and then we can put that alert on it. Now we can see it's gone to a buy signal, but remember those alerts go out after the market closes. I mean, I'll put an alert on, but it'll probably mean I'll get an email tonight that says it went from hold to buy, but let's go ahead and put it on there anyway. Let's go back. Let me go back. Might as well go ahead and do that right now, or I add those alerts onto these other ones here. LPI. Add it to the watch list. And then SD, I can just do it from here actually. Just click on that blue, or excuse me, the green plus button right there. All right, under computer and technology sector, there's only one I'm kind of looking at. By the way, I skipped over the transportation sector because really I'm still waiting for the ones that we have in the watch list. We have ESEA. That's another one. There's another one in there. They might have actually gone to a sell signal, but I'll show you those patterns there. But we've got a few that we're already kind of watching in that sector to wait for them to rebound out of their correction. But computer and technology, I have to go down the list a little bit on this one here, but GDYN, 92 strength rank. We're getting down there a little bit lower, but again, I don't have to trade this. It's just a pattern I liked. We can just put it in the watch list. But again, you've got it moving sideways. Whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. But it's at a hold signal right now. Let's put it in the watch list. When it put an alert on there for when it goes back to a buy signal, we can take a look at it. And then one last one, we'll go under industrial products. And this is a 94 strength rank, BBIG. Now this is one that's had a deeper pullback right here. It was in a long sideways range correction right here, and then it had a big burst, and then it's kind of had this long pullback, pretty deep pullback as well. Typically pullbacks will be they'll retrace about 50% of the previous move. This is a little bit more than 50%, but there's a range there. That 38.2% to 61.8% is kind of the range you look for in the pullbacks. And again, this is one we'll make a decision on if it goes back to a buy signal, but it kind of looks a little bit choppy on this pullback through here. This is looking a little bit stronger, like a little bit more of an impulsive move. They go back to a buy signal, maybe we can get in, put a stop down below here, and then see if we can get back up to this previous high. But that's what I want to keep an eye on. It doesn't mean I'll trade it, like I said, but we'll put it in the watch list and make a decision if it goes back to a buy signal, and if we have any capital that we can use to get into it. All right, so let's go into the portfolio here and let's take a look at the positions we're already in. We're still down a little bit. We're down a couple thousand, but we're now starting to see the market move. So we should rebound from that pretty quickly. If this is a genuine rally and we're going to start rallying back up, and we've added a few positions that haven't even really started to move yet very much, and so there's a lot of potential there to get positive as soon as that pullback takes place. Again, if you've been following the portfolio there, we were up was like $3,000 or $4,000, and then we had this big correction, or not huge, but a decent correction that took place. I think the most we dropped down was about 3,000, maybe 3 or 4,000. But again, on how we managed our trades, we stopped out of some trades. We stopped out with some profits on some of those moves. Again, we didn't get that big of a dip. We have a $100,000 account. You drop down, 4,000. That's going to happen at some point when you have these pullbacks. And if you manage it properly, you're not going to get these big drawdowns. And then now it also means that if you're not risking or being aggressive, you're not going to get huge gains either. But that's how you want to trade. You want to trade in that range where you're not getting too greedy when things are working out. You're not getting too scared when things are going wrong. You're almost kind of just, your emotions are kind of in check. SGKS is broken out today and a nice little move. Hopefully this can continue to run. We've been in this one for a while. It is now in the extreme reversal risk range, and so one technique that we could use is if it does close below the low of the previous day. If it looks like the market could be pulling back or something like that, we could go ahead and use that kind of a tight stop type technique. Obviously, if it closes below today's low, it would wipe out the entire gain of today. So I'm not expecting that to happen, a close below the low of the previous day for maybe a couple more days. But we'll keep an eye on that. Let's put it in our portfolio right here so we can just scroll down through it. IKNX went to a buy signal when we got in. It's pulled back a little bit right here, back to a hold. This one hasn't even taken off yet, so there's real potential there for it to go. Our stop is down below this area here, so we're giving a little bit of room to get going here. But I like that kind of a bowl-shaped move right there. I think that one will work out fine. Tesla, obviously, this one we got in on this little correction right into here. It's continuing to move higher. It's getting into the extreme reversal risk, but we can still expect that to move a little bit higher in the next few days, get a little bit more overbought. TTI broke out, and this is an oil stock, so oil has kind of been pulled back a little bit. It's kind of moving back up again today, so we're hoping that this will hold that breakout. It's kind of broken out and pulled back to the breakout area. Hopefully this will start taking off, and we're expecting to move back up to these highs up here. This also has kind of that bowl-shaped move, which is why we got into it. IRIX, it's gone back to a hold today. It's down a little bit today, but I still like the potential inverse head and shoulders pattern here. I think once it breaks out above here, it'll start taking off. You can even look at the more recent move. Here's impulsive. This is corrective. It should continue to move higher. And that's our portfolio right there. That's all we have in there right now. We've got about 30,000 in cash available to get in to some new trades. Let's go to our watch list right here. We can kind of go down through the watch list. We're still watching this game. I might just have to trade this one if it goes back to a buy signal, just because we've been watching it for so long, and I've almost booted it out a couple times, but we're still going to keep it in the watch list there. Technoglass here, TGLS. I haven't kept it in here, but it's gone a little bit too far for me to chase it from here. But I'll keep watching it. It is kind of moving a little bit sideways through here. I think I was going to watch, see if it moves a little bit sideways through here, and then breaks out, holds a breakout again, and maybe we could have a second entry point into that. But it just depends. Again, we've got a limited amount of capital. I don't feel the need I've got to chase anything right now. And so, but I'll keep it in there. We can keep looking at it. GameStop, still wait for that to go back to a buy signal. This is a shipping. I might just boot this one out though. DAC. I told you that this probably is going to go lower. The reason why I kept it originally was for this little pullback right here. We were waiting to see if it went back to a buy signal. Had this big sell-off right here. Then I kept it in the watch list in case this was wave A, wave B, wave C. It was going to start to move higher there, but as it started to move sideways right here, I said, whenever you see a stock moving sideways, you want to pay attention to where it was moving before it moved sideways. In this case, down. That's where it's more likely to go after it starts moving sideways. I think this one will probably drop a little bit further. So I think I'm going to just go ahead and boot that out of the watch list. It's on a sell signal too right now. Not that I have to boot it out because it has a sell signal, but it's just not looking very good. And there's other shipping stocks that look a little bit better. This one I'd rather trade if it starts to move back up. You have this little bowl-shaped move right here that pulled back. This could be an ABC pullback right here. I don't want to dip too much further than it already has there. You're already at a deep retracement there. But I'll give it another few days to see if it can start to rebound, because if it can, that could be a possible bullish ABC pattern. Alcoa, I like this pattern too. I'm just kind of waiting for it to go back to a buy signal. Hasn't quite got there yet. SENS, the same thing, waiting for it to go back to a buy signal. ORMP, don't want to chase it right here. There's another shipping company, ESEA. Again, I'll keep this in there a little bit longer. It's possible this is an ABC. It's getting real deep though, and it's right at that breakout area, so it really needs to start to rally here pretty soon. ASAN, this is one I want to get into, but I'm still worried because this looks like just a quick pullback, and then whenever you have this back and forth, it looks like a bearish ABC pattern, although we're getting pretty deep in that, if that is a bearish ABC pattern. But this is a kind of a bearish candle right today, so I'm going to hold off on that one. It might be one of those that I just missed because it just goes too far. I don't want to chase it, but I just that kind of feels. Wave B, the nickname for Wave B is a sucker's rally because it is moving higher. So you get the first sell-off is Wave A, and then Wave B tends to be more choppy as it rallies back up. But it's a sucker's rally. It sucks people in, and then you get Wave C that kind of flushes those people out, and then the trend continues. You're always going to have situations where you're going to be the sucker. You try to avoid it, but you never know. You can get these quick pullbacks that do end up going higher, that don't have an ABC in those on the pullback. But that's always, whenever I see this context, that's always the tough thing for me. I try not to be the sucker, and then sometimes these will just end up breaking out. But I also know that if it does break out, then that isn't a bearish ABC pattern, and I could get another chance to get in. It could give me another opportunity. What I would probably be looking for, though, is if it gets back up to this breakout area and then maybe has a real sideways move or something, a corrective move that would give me a little more confidence that the next move will be up. I could trade that, but I'll keep that in there for now. Say LXRX, I'm not going to chase that. In fact, I'll probably need to take that out of the watch list just because it's gone so far. I really don't see an opportunity in it right now. RIG, this is what I am going to enter today. Again, I like this little corrective behavior here. This impulsive move up. It is going back to a buy signal today. Although it's down, it gapped up a little bit today, so it's possible, because it was a hold yesterday, it's possible this could, by the end of the day, end up going back to hold. One thing I could do is not get into it in class today, wait a little bit closer to the market close to make that decision. But for those that are kind of new that are joining in, I would like to show you how to kind of place a trade in the portfolio. So I may just go ahead and get in that, because even if it does come down, I put my stop down below here. Even if it stays in the sideways range a little bit, I still expect it to eventually break out. So I think I'm going to go ahead and get into that today. TELL, still waiting for that one to kind of go back to a buy signal. ARC, that's a deep pullback right there. But if it can move up from here, it could be a possible opportunity. Mara, I'd be kind of chasing it right here. MRIN, still waiting for it to go back to a buy. This is another one I might enter into today. SMLP with back to a buy signal. Again, this looks like a inverse head and shoulders pattern through here. I could wait for it to break the neckline and break out. And if the market was still acting skittish today, I probably would. But with that kind of breakout move today in the S&P, it looks like it's kind of starting to maybe take off on a move. I think I can kind of go ahead and get into this now. This is always something I go back and forth with in my decision-making process on patterns like this. There's always pros and cons. The pro of waiting for the breakout is you get the breakout, it's much more likely to go up off of that breakout. The problem is a lot of times when it finally decides to break out, it breaks out on a huge move. And then you feel like you're chasing it, and you'd like to have that big move. So a lot of times what gets me to make the decision on whether to get in a little bit early and not wait for that breakout would be the market conditions. Just like I said, if the market conditions look like that we're going to continue to trend up, then I would assume that this is going to break out and keep trending up. Typically, most stocks are going to follow the major market averages. If it looks a little bit weaker, market looks a little bit weaker, I'd be more likely to hold off on that. And so that's kind of a little bit behind that. How I make those decisions sometimes is depending on other factors, other things I'm analyzing. In this case, the market conditions. All right, I'm going to come back to these to get into them. But BTU, I really like this pattern too. Kind of that bowl-shaped move, had this impulsive move up. This looks corrective. Just wait for this to go back to a buy signal. It's down a little bit today. Then go back to a buy signal. Good chance to get back up to this previous high if it does. And then if it breaks out, you can, again, take the distance of that move down, project that upward. It gives you kind of a expectation of how far it could go after that. Not that it will, but BKU, again, this is one that waiting for it to go back to a buy signal, and you could wait for it to kind of break above this range here. But I'll keep that on the watch list. Oh, there's a comment here that earnings on SMLP on November 5th. Yeah, a lot of companies are going to be coming out with earnings in the next, this is earnings season. I mean, this is when the majority of stocks will report earnings for about the next 3 to 4 weeks. The majority of stocks out there are going to be reporting earnings. So almost all of these are going to have probably earnings coming out. Now, if earnings are just about to come out, if you get a buy signal and earnings are coming out tomorrow or something like that, you could make a decision to wait for the earnings to come out to get in. Earnings can kick a stock either direction, and you just don't know what that direction is going to be. You could have good earnings and the stock could go down. You could have bad earnings, the stock could go up. You could have good earnings, the stock could go up. You could have bad earnings, the stock could go down. It is a coin flip. That's why I don't trade earnings specifically, because it's a coin flip, and I like to feel like I have an edge. I don't want to feel like I'm guessing or I got lucky, guessing right. So that could be part of your decision making. Not with it out till November 5th. That's so far out. You got to make a decision now. We might be in and out of that trade by the time they report earnings. But like I said, if it's gonna happen tomorrow or something, Now, if you're in it for the long term, you don't care if it drops on an earnings report, then you could go ahead and take that chance because maybe it has a big pop off of earnings and you get to benefit from it. But in many cases, I tend to just want to wait until after earnings. I figure that if it goes up, I might have missed that move, but it could be kicking off a big rally that could last for quite a while, and I could ride the later part of that rally. If it drops let's say it drops on a good earnings report, it could give me a much better entry point, and that stock could start to rebound after it gaps down. So there's decisions you can make with earnings either way. But most important to me is the chart pattern, and that's what I try to focus on and trade. You're not going to get a fundamental trader in me. I'm a technical trader. I really don't care what the fundamentals are. I don't know the fundamentals on the majority of the stock, on everything I trade basically. That's just not what I chose to focus on. I chose to focus and get really good at reading the chart. And I guess it's really important to point out the reasons for that real quickly, because I've talked about this before, but again, some of you might be new. My philosophy, well, first of all, you have to understand that you as an individual trader, your trading decisions will not affect the movement of that stock. If you buy 100 shares of IBM, you are not going to make the price of IBM go up. You're not going to make the price of IBM go down. What moves these stocks, or what moves the market, are the big institutional investors. These are the ones that buy thousands of shares or millions of shares of stocks. They are the ones that cause the stocks to go up or the stocks to go down. Okay. Now, my philosophy is that these companies base the majority of their trade decisions on the fundamentals. They do. They hire the smartest people in the world, and they equip these smartest people in the world with technology that allows them to analyze these companies fundamentally better than you and I could ever dream. There's no way, at least that I'm assuming I'm not that smart. I'm assuming I can't compete with that. I can't out analyze these guys. And even if I could, I can't cause the stock to go up because of my analysis. I would still need them to find what I found first to cause that stock to go up. So early in my trading career, I said, I can't compete that way. I can't compete with these guys fundamentally. But what I can do, because they are the ones that move the market, they are the ones that create the charts. Their buying causes the chart to go up. Their selling causes the chart to go down. Their indecision causes the stock to move sideways. If I can get really good at reading what they are doing and just follow what they are doing, that's my competitive advantage. That's what I can do better, is to read what they're doing, read their poker hand, or poker face, so to speak, and ride along with them, up or down. So that's my reasoning for not. Again, I don't waste a lot of time analyzing a company fundamentally. Now, some of you, then that's what you love doing. I mean, maybe that's in the line of your work or whatever, and I would encourage you to keep doing that. Then, if that's what it was part of your passion, then keep it as part of your analysis. But you're just not going to get a fundamental argument from me, at least not very often. All right, so let's go ahead and. Oh, then these are the ones we just added in, so we don't need to look at those right now. So let's go to first one we're getting into, which is rig. And you're going to go into this plus sign right here, add to portfolio. And I'm going to add it to the stock specific class portfolio. Now, I don't know if you can see it down here, but I'm putting my stop. I'm putting my stop down below the bottom of that sideways range, down there, and it's at $3.60. So I'm going to put that in here. Stop price at $3.60. how many shares. I always just throw a number in because I'll put 100 shares in there. Oh, that barely moved the needle there. Well, let's do 1,000. See, 1,000. I want the portfolio at risk to be close to 1%, 1 to 1.5% in that range. But I also have to be aware of the cost. I don't want to have more than $10,000 in one trade, so I do have to watch that. But so far with that management, we could probably go to 3,000 shares. That's pretty. That's, in fact, we might have to drop it because now that we're still below the percentage risk, but we're over 10,000. So I'm going to drop that down. Let's try 2,500 shares. Okay, now we're under 10,000, and okay, so let's go ahead and do that. We'll do 2,500 shares. Purchase and go to my portfolio. We'll take a look at it here. There it is, right at the bottom. A couple of questions here. Yeah, you do want to analyze volume as well, and have that be part of your analysis. You can't at this time you can't follow or build a portfolio with option trades. This platform is designed to be a stock platform, trend trading, where you're just writing the trends. It's not designed to create a portfolio with option trades. Some brokers out there have virtual accounts that allow you to practice trade and have a portfolio of option trades. I think there's a few out there that you could probably look at to try to, if you're getting into options, to kind of have a kind of a practice portfolio you could use for option trades. But I can't do that on this one right now. All right, let me add one more. Oops, watch list is where I want to go to, and that's SMLP. So on this one right here, I put the stop down. I put it down below here. There's an intraday low down here I could have used, but I put it right here because you have the resistance here, you have the support here. This is the key area right here. And I didn't want to have much more risk than that, so I just put it right below that low. And I put it at $34.30. So let's add this one in. By the way, if on almost all the stuff I talk about, I've done trainings over the last year that have been recorded and posted on that YouTube channel. So if you're interested in learning different stop loss techniques or allocation and how am I allocating, trend analysis, ABC patterns, Fibonacci retracements, there's all kinds of little trainings that you can go through on your own time. All right, let me put my stop price in at $34.30. Let's just put 100 shares in there to see what that looks like. We can do a little bit more. Let's do 300 shares. That's right at that 1% risk, but we're a little over the 10,000. I'm going to go, let's do 280. What does that put us at? I want to be under 10,000. I want to make sure we have some capital in case we get some moves here. That's probably close enough. 270. All right, let's go ahead and place that. All right. think we're good to go. Again, if you have questions during the week, you can direct them to Jerry at Traders Pro. I'm not going to write that all out. TradersPro.com. All right. Thanks, everyone. Have a good week. We'll see you on Tuesday for the market update. Bye now.